Hi, Greg Lewis, Metastock Software. You're about to watch one of the presentations from the 2017 Online Traders Summit. I know you're going to enjoy it. Before we begin, I want to tell you just a little bit about us here at Metastock. We've been in business for about 30 years. Metastock is about the most powerful platform you can get for the private trader anywhere. You can test, you can scan, you can forecast, you can customize to your heart's content. It's an amazing piece of trading technology. If you'd like to get a free extended trial of Metastock, I encourage you to go to metastock.com/traders-summit 3-for-1. That's metastock.com/traders-summit 3-for-1, or just click one of the links provided, and you can get 3 months of Metastock for the price of one. That's an amazing deal. I encourage you to do so. I know you won't regret it. Please enjoy the presentation and successful trading.
Today, the next speaker that we've got coming up right now is Jonathan Rose. Jonathan Rose has been trading and in the market since 1998, which is a really long time. We've had him on the summits before. He does a really, really good job. And let's go ahead and bring him on here. Jonathan, can you hear me?
Hey, Jeff, I can hear you.
All right. What do you want to say for yourself?
You hear me okay?
I can hear you great. Yeah, you're coming through.
Oh,
what do you have to say about yourself?
What do I have to say about myself? Well, I'm excited to be here. I'll tell you that. Thank you for having me.
Welcome. Welcome. Well, before I turn the time over to you, I'm going to answer one question that keeps coming up, and that's about recording. So we are recording the whole session today. We're all 8 hours. We put them up on our YouTube channel. I'm going to send the link around once Jonathan starts here, and you're welcome to go up there and subscribe. What will happen is, as soon as we've got everything kind of converted over and ready for YouTube, I'll send you an email myself that'll actually send you the link for that. So in any case, Jonathan, let's get you going, man.
All right, fantastic, Jeff. Thank you.
I'm going to get out of your way.
No, we're good. All right, cool. So welcome, everyone. Thanks for inviting me to Metastock. I'm so excited to be here today. Today I'm sharing my flagship product. It's called Swinging for the Fences. So just to get this out of the way from the start, this style of trading, it's exactly how I learned how to trade options, and it's the exact way that I always teach options. I think we've been through a few risk disclaimers already. So the big promise today, guys, I've taught hundreds how to trade options this exact same way. The comments I get is, wow, I didn't know you can do that, or wow, why don't others teach this? So it's the foundation of exactly how I trade, exactly how I teach. I've broken this process down. It's been proven to help others. Many have called it just a complete paradigm shift. So I'm not asking you to believe anything just yet, but I am asking you just keep an open mind, because this works, but I'm going to make the assumption that it's very different than how you approach the markets. So here's what I'll show you today. I'm going to show you how to find and buy low-priced options, putting ourselves in position for awesome returns without staring at the market all day, without worrying about our positions. For me, I think when you stare at the market all day, it doesn't really help. If anything, it could actually hurt. Because what you're doing is you're inviting emotion into the trade. So I want to encourage students to make good decisions, trust the work, and then the market's going to do what the market does. It's like forced discipline. The thing that you'll find is somewhat different is, for my trading style, how I teach, we need a real reason for being in every trade. And when I say real reason, for me, technical analysis alone is not enough. I want substance. So I'm going to walk you through many examples that show a reason that goes far beyond just using technicals, okay? And it's a way different approach than many are used to. Here's Stephen. Stephen was no different. Stephen was skeptical before meeting me. He had no confidence in his process. He was only trading using technicals, and he was so frustrated because he thought everyone was doing so great, but he couldn't get any traction. Now we've been working together for 16 months. Stephen's a full-time stay-at-home dad. His approach to the market completely changed, and he's confident in his process. He can now spend time with his little boy. He doesn't feel the need to stare at the market all day, and Stephen's learned to manage money and take a consistent income out of the market. So now I just want to say, guys, I mean, this is great that you guys are doing this all day, so congrats on being open to learning. It's a great day of education with some impressive speakers. What I share with you, it's not a trick. It's not something you can use once. I'm going to teach you how to trade options, and you'll use this approach forever. So let me stop here and ask, who here trades options? And if you guys could just give me an idea of where you're at, say 1 through 5. 1, what the heck's an option? And 5 is, I speak fluent options. I really feel confident trading options. That'll really help as I go through the examples and the educational side. So as those answers are all coming in, I'm going to keep pressing forward, and then we'll get back to kind of an average of the room. To many, options can be confusing. But like anything, if they're taught wrong, of course it's confusing. I want to simplify these things for you because it's not about what I know. It's about you being in the strongest position to succeed and meet your goals. And the options market presents the best opportunity in trading. So if you're willing to learn, this approach can get fast results. Just have an open mind. So we're all across the board here. We have some 1s and we got some 5s. Wow. Overall, I'd say an average of 3. So as I go through the training today, for those who feel like there are 4 or a 5, I would expect you to know the examples and the questions that I'm going to ask. So, you know, let's see what kind of grasp you really have on the options market. Let me take this time too to explain why I'm extremely qualified to teach you about options. If I was in your shoes, that's exactly what I'd want to know. I've been trading for 18 years, not marketing, not sales, just pure trading. Where I really learned about options, where I really got to see what makes the options market work, was I was a market maker on the floor of the Chicago Board Options Exchange. To be a market maker, you need to be able to value options to the penny, and that's something that I can do. I share my background with you just so you can see I'm an expert in this area. 4 years as an options market maker, I've trained over 100 professional traders, at that time concurrently trading 100 names, 1,000 different strikes. Before I was a market maker, I traded bond futures for 8 years, and then I was on the floor of the Chicago Mercantile Exchange trading NASDAQ futures and trading S&P futures. So let's talk about edge. What's edge in trading? Edge, it's what makes you different. Every trade you make, you need to think about why. What's the reason that you're in that trade? What's the reason that you have edge? Think of your last few trades. Did you have a good reason? Was there a reason that you had edge over other competitors in the market? Today I'm going to show you a trade where I have edge, but I'm also going to explain to you why I have edge, because that's just as important as having edge. For those that don't trade options, if you put a 1 or a 2 up there, that won't matter. Again, it's exactly how I learned. It's exactly how I teach. We're going to be talking about buying options. Whenever you buy an option, whether you buy a call, whether you buy a put, whether you buy any debit spread, a straddle or strangle or whatever, you're always long volatility. You're long movement. You want craziness. When you're short options, it's the opposite. You just want everything to settle down, to be quiet. So just to be clear, if you buy an option for 30 cents, let's say we buy 10 calls for 30 cents. It's $300 of risk. You can never lose more than $300. You can buy one for $30. You can never lose more than $30. That's a tremendous benefit in learning how to buy options because you always know exactly what your risk is before you get into the trade. Most are taught to sell options. Do some of you guys only sell options, or have you been taught you should only sell options because buying options is really, really dangerous? This is the difference. Selling options, you can think of it as you're risking $5 to make $1. Buying options is the opposite. If I generalize, you can think of it as risking $1 to make $5. Many teach only to sell options because if I could sit up here and teach you a strategy that says, I could teach you how to sell out of the money options and you're going to make money 99% of the time. Wow, Jonathan, that sounds really great. You should be terrified of that 1%. So many teach how to sell options because sure, you can make money more often than you lose, but it's all about how much are you taking in versus what your risk is. Overall, my goal for the presentation, I want you to understand two things. One, I want you to understand there's more to trading than just technicals. Two, I want you to understand that others have committed to this process and are no longer searching for the best approach to learn and trade options. So with that being said, think about the benefits of buying the little stuff, investing small for huge returns, being in a $300 trade where you can capture awesome upside. Imagine this. You put on a small trade. Say you risk $90 or $900 because you have a really good trade idea that you like. That trade works. You might be able to make 200% or 600% or maybe even 1,000%. Once the trade's on, you forget about it because you have the position for 20 days. And now it's just a wait and see. No staring at the market. Nothing you can do can help. And then finally it works. Your $90 of risk becomes $300 or maybe $500. So that's exactly what happened in our trade in YRCW. The trade was in October, YRCW got destroyed in earnings. It was down 50%. I was on the conference call. They were down 50%, but they just had a bad quarter. They didn't have any accounting problems. There wasn't any tail risk. So I sent a trade idea out. I'm buying the 9 calls and the November 10 calls, 18 days to expiration. I'm aware I may lose 100% of my principal, but these are the exact trades that we're looking for. You can see 9s and 10s, YRCW, after earnings, I guess, was just valued wrong, went higher really, really fast. This was the exact trade that Mark here was able to make 2,200%. Thomas ends up making over audio guy. Can you guys hear me? Sound? Sound? Am I back? Sorry about that, guys. That was weird. All right, I'm just going to keep going. Sound's back. So again, these are the opportunities that we look for. You can see Thomas makes 800%. Mark, he ended up buying 100 of the 10 strike calls for 9 cents. It was $900 of risk. Ended up making over 20,000 on the trade. And Kelly down here makes 600%. Those are the kind of opportunities that we're looking for. So let's start going through some options education so you get a feel for how I teach. Because at the end, I'm going to invite you to be part of the Swinging for the Fences options program. The program involves a lot of education, so I want you to get a taste of what you'll learn. because right now options are too big to ignore. So let's go through an example so you can see. In front of you, can you guys all see it's a stock, ABC stock, a phony baloney stock? So the 12 strike calls trading for 40 cents. Stock's at 10 down here. Let's all buy 10 for $400. We can buy one for $40, right? It doesn't matter. You can buy 100, whatever. The way that I teach options is if the stock's at 10 and we buy the 12 strike calls and we buy 10 of them, just think like you're long 1,000 shares from 12. Okay? Options are a derivative of stock. So time doesn't matter for this example, John, but call it 20 days out. It doesn't matter. 20 days out. If you buy 10 of the 12 strike calls, your risk is $400. You can never lose more. Okay? Again, think like you're long 1,000 shares from 12. Why would you want to be long 1,000 shares from 12 if it's trading at 10? Because you get awesome leverage. Stock goes to 11, 12, 13, 14. Let's say the stock's at 14 right now. And all you guys who said 5, you should nail this idea. Let's say the stock's at 14 right now. You're long 10 of the 12 strike calls for 40 cents, $400. If you want to lock in profit, if you want to take all your risk off the table, what can you do? What are some things that you can do? Stocks you're long the 12 strike calls. You're long, think of it like 1,000 shares. It's at 14 right now. You want to cover the trade. What are some things that you can do to get out of this trade? Okay, some people are saying buy puts. You don't want to buy puts, guys. Buying puts is adding risk. You're adding volatility. You do not want to buy puts. You could sell 5, sell half your position. You can sell all of your position. What I would do, and I haven't seen the answer yet, I'm going to do something that's totally different than what all you guys have said. A lot of people want to sell puts. What about this? What if I sell 1,000 shares at 14 instead of just covering my position? Why would I want to do that instead of covering my position? If I'm long the 12 strike calls for 40 cents, if I sell 1,000 shares, I make $1.60 10 times, $400 of risk. I'm now up $1,600. That's not bad, right? If you just sold the position, maybe you could have sold for 220 or something 240. The reason I do this, it's actually not a hedge, guys, is because I don't want to give up my optionality. Because watch what happens. And this is why when people share returns or people say, Jonathan, what's your return? If 10 people have the same exact trade, you know how many different results you're going to get? You're going to get 10 different results. Watch what happens and the benefit of doing this. I have 0 risk on. Okay, I've locked in my profit. I can't lose a dime on this position because if the stock goes to 100, I'm long 1,000 shares from 12 through my options and I'm short 1,000 shares at 14. I don't care if it goes to 100. I don't get to take part in that. But let's say before expiration, ABC stock comes out with accounting problems. They have accounting problems and the stock goes from 14 all the way down to 5. Look at the benefit that I just captured. that people who don't understand that you're allowed to sell stock aren't able to capture. 12 strike calls, I'm long 10. I sell 1,000 shares to lock in my profit. I make $1,600. The stock plummets down to 5. Now I buy back my 1,000 shares. I just made $9,000. My calls are worth 0. Big difference, right? What you don't want to do when you're trading options is lose your most powerful thing, and that's going to be your optionality. Here's something that my clients are sick of: spending more and more money online, buying another indicator, buying another system that promises riches. Can anybody relate to that? You're not learning anything. There's nobody around to help you. It's just dead money. That's why throughout this presentation, I'm going to show you lots of proof. Proof with my background, proof with my knowledge, and proof that other clients in similar situations have had success. Learn something real. Learn the correct way to trade options. It's something that you could always build on, and it's not a gimmick. And as years go by, you'll get better and better and better. I trade for a living, and this is a good example of how the professional sees the market differently. Remember earlier I said we need a reason for being in every trade? Here's Sarepta Pharmaceuticals, SRPT. I was a market maker in this stock. We used to call it Serpent. Okay? I knew before the FDA released their findings on SRPT getting approved that the FDA was a 50-50 split. It was very contentious. A few days before the FDA decision, this news was released. The FDA confirms that Sarepta's nemesis, Ronald Farkas, leaves the agency. Wow, the nemesis, right before the FDA decision, leaves the FDA. I know what that means. I think this drug is going to get approved. This article came out September 14th. September 15th, right here, I shared a trade idea with the members. Guys, I want to buy upside calls in SRPT. It's really expensive, but if they get approved, I think they'll get approved. Once they do, the stock will trade over 50, maybe 60. Okay? Again, big risk, big reward, but 3 days later, the stock jumps from 25 all the way up to $60. Okay? Having a plan for every trade. This time, clients were able to capture this trade. See Stacy up here. Thank you. At this rate, you're going to be stuck with me for a while. Tripled my money very, very quickly. Mark here, long 3,500 shares from 28. 3 days later, the stock was trading 60. That's $114,000. And then Taurus down here, congrats. You're the ambassador quant in my trading world. I had to look that up. I didn't know if that was nice or not nice. It turned out to be a Jerry Maguire reference. Earlier we talked about this, people learning that you should never buy options. If someone teaches you that you should never do something that half the market does, I don't know about you, but I would be probably curious about learning that. This is going to be the main difference between buying and selling options. On the left is buying options. Whenever you buy options, you're going to lose 60% to 90% of the time. Maybe your winners are 10 to 30%. And again, you're long volatility. Whenever you buy options, you're long volatility. Whenever you sell options, it's just the opposite. When you sell, you're going to win more often than not, but you have real risk. Remember, you're picking up $1 to risk 5. when you sell options, you're going to lose 10 to 30% of the time on average, but you have to watch out for the size of your losers. And again, whenever you do that, you're short volatility. I got some questions coming in, guys. I'm going to go through the entire presentation because I'm concerned about getting everything in within 55 minutes. And then at the end, I'll go back and go through any questions if we still have time. Can anybody tell me what this is? There's 5 different things on my screen. What is this? This is the most important part about options trading. These 5 things. Maura, excellent. You got awesome. You guys are getting it. These 5 things are what prices an option. If you want to figure out how to price an option, there's 5 inputs. That's it. Okay? Out of these 5 inputs, let's go through an example with Apple options. If we're going to trade Apple, we know what the underlying stock price is, right? It's given to us. We know what the strike price is, given. Time, given. Risk-free interest rate, use a 1-year, use a 2-year. We know that, right? What about volatility? When you're pricing an option, there's only one subjective component. There's only one thing that we need to figure out, and that's volatility. These are the 5 inputs to the Black-Scholes model. I'm going to make a bold statement right now, and I don't mean it to be like some arrogant whatever, but if you're trading options without an understanding of volatility, you will fail. It's the only subjective component. The other 4 are given to us. They're objective. We need to figure out the subjective component to understand where to price these things. So this next slide, IV or HV. IV is implied volatility. HV is historical. Implied is what's going on in the market. Historical is what has gone in the market. It's all volatility. So in this example, let's do another phony baloney ABC stock. And I want to show you this example because I want you to see the importance of volatility. On the left here, ABC is trading $20, 30 days to expiration, low vol, 30%. Let's call it Microsoft, low vol stock. 30 days to expiration, the 22 calls are a dime. The 24 calls are 0. The puts are a dime, the 16s are 0. So the market is telling us if we want to buy 1,000 shares at 22, 1,000 shares of the underlying at 22, it's only going to cost us $100. It's really, really inexpensive because the market is saying that there's not a high likelihood that Microsoft or ABC stock trades above 22. But look at the high vol stock. Think of the high vol stock as a solar stock or a gold mine or a silver miner. Stock's trading at 20, and let's say the range in this stock has been like between 16 to 25. It's a very volatile stock. It bounces up and down. It's all over the place. 30 days to expiration, these calls are worth 80 cents. Even the 24 calls are worth 30 cents because there's a probability, some likelihood that the stock could trade up there. You can see on the low vol stock, the market was pricing in a probability of 0. Even on the puts, the 18s are $1 and the 16s are 70 cents. The only thing different between these two names is volatility. But look at the effect on the pricing, it's massive. Can somebody tell me, and again, I'm going through this not to test everybody, just so you can see how I teach and being able to use this information going forward. why are the upside options 80 cents and 30 cents, $2 above, $4 above, but the downside's at the $1.70? Why is the downside more expensive than the upside? Why did I do that? I just made up the example, but why did I make the upside cheaper than the downside? They're both 10% away and 20% away. What's the reason? Trey, great answer. Now, as the answer's coming in, great. I still haven't, John's got the right answer. John G, great, good for you. Now, when you guys say the downside moves faster than the upside, respectfully, that's just, you heard that somewhere, okay? That's not necessarily true. There's a definitive reason of why I did this. What are the two most popular option strategies? I'm a market maker. I know the two most popular option strategies are one, covered calls, where people want to be long stock and sell upside calls for income, right? So as a market maker, upside calls, I'm going to make cheap because I want the edge. The other most popular option strategy, I'm going to buy puts because I want to protect my account. Oh no, the sky's falling. The market's going to get destroyed, like everyone says. I'm going to buy downside puts. Market makers know this, so we're going to make the puts more expensive than the calls. And what that is called is skew. S-K-E-W. We're going to skew the markets to go in the direction that we think it's got a higher probability to go in. Most options markets have a downside skew. I put up two examples here. The only industry that continually has upside skew is going to be biotechs. And all that means is the upside's more expensive than the downside. And if you think about your last trade in biotech, I'm going to bet that it was buying upside calls because that's what people, especially retail, likes to do. So again, SRPT, Sarepta, last trade 54.88, let's call it 55 for easy math. 55, if I go $25 higher and $25 lower, look at the difference in the price. $25 higher, mid-market's like $1.70. $25 lower, mid-market's like $1. The market is skewing SRPT to go higher. This example down here is MDXG. The market is skewing MDXG to go lower. You can get a lot of information by how the options markets are priced. Trading 11.46, the 5s, about 50-cent mid-market. The 17.5s are about 30-cent mid-market. The options market is skewing MDXG to go down, so it's got a higher probability to go lower than it is to go higher. So in the swinging for the fences strategy, we need two things. For one, we want stocks that move like crazy. We want stocks that are moving so fast that nobody knows how to value them, or the market doesn't know how to value them. We also want tradable options. And tradable options just means that 15 cents at 20 cents or 20 cents at 40 cents, may have 20 cents at 35 cents. We don't want it to be 20-cent bid at $1.50. We can't do anything with that. This is where my expertise is focused. And this is why I have edge. Here's an example. Think of Apple. How many analysts cover Apple? 100? How many market makers trade Apple? 50, 60, 70? Because of the analysts, because of the market makers, because of the immense liquidity, Apple's the most perfectly valued stock in the world. That's by definition. The more liquidity, the more analysts, the better value a stock is going to be. What I want to do is I want to find stocks that are off the beaten path. YRCW, MDXG, SRPT. I have edge in those because those stocks might have 3 analysts covering them and 1, 2, maybe 0 market makers. That's why I have edge in this trade. Before I get into exactly how this opportunity works, I want to share something that happened to me that was very special. Jim Cramer from CNBC came across my content and sent this to me. Out of nowhere, he sent this to a mutual friend, and it was incredibly flattering. Jake, this guy is great. Wow, this guy's amazing. I want to be on his podcast. I think he's a star. Out of nowhere, Jim Cramer reached out to me. I started Active Day Trader because I felt there was a void in the market for what I really considered to be strong education. Having Cramer reach out of nowhere was really awesome. A couple of weeks later, I had Jim on my podcast. I actually started a podcast because Cramer asked to be on the podcast. I figure, how can I say yes without having a podcast? You can see Cramer's the number 3, which was really, really exciting. Okay? The podcast is called Trading School. Everyone's got it on their phone. Please check it out. But one of the reasons he reached out to me is because he saw my content and he was blown away. He thought it was really great. So when I interviewed him on the podcast, I wanted to go over a couple of approaches that I teach to see, just get some feedback. One of the things that we discussed on the podcast was trading lockups. Here's how you trade lockups, or here's an example of a lockup trade. Laureate Education, LAUR. LAUR had its IPO February 8th. At that time, 35 million shares were available to trade. When a stock has an IPO, they release a small portion of the amount of shares to be available to trade, but they restrict all the stock that insiders and directors own because they don't want them selling that stock in the open market and knocking the value of the IPO down. It's very embarrassing. It doesn't look good for the underwriters. After the lockup, 6 months later, 133 million shares that were previously restricted are now available to trade. Average daily volume is 300,000. Shouldn't have a dollar sign there. I shared a trade idea July 13th. We're looking to buy the 17.5 puts with 33 days to go until expiration. This is such a great trade for retail traders because it just makes sense. There's a real reason behind the trade. So let me walk you through exactly how the trade worked. IPO, 35 million shares, LAUR. Okay, it doesn't go down. You notice there's a floor where the IPO price is. I'm sure the underwriters are supporting it. IPO, it runs up to 14, 15, 16. Think like you're an employee. Think like you got a $100,000 bonus. They gave you shares of the IPO, but they said the one thing is you can't sell it until 6 months from now. Okay, great. Well, stock gets up to 15, you want to sell, but you can't. Goes down. Now the stock gets to 15, 17, 19. You want to sell, but you can't. Here's where traders get involved. Here's where professional traders get involved. Shared the trade idea. We're buying 17.5 puts, which gets us short from 17.5. 133 million shares are now available to be sold. What's going to happen to the stock? That's an avalanche of supply coming to the market without enough demand. That stock is inevitably going down. Now, is it 100%? No, nothing is. But these are the reasons why we need these are the reasons we need to get into trades. For those who just rely on technical analysis, can you imagine thinking this is a double bottom right here without knowing that 133 million shares are coming to the market? Danger, right? What I always want to do whenever I show you an example is show you the time that I shared the trade, the reasoning why I shared the trade, but also, just results showing that real people were able to get in those trades once they understood what we were looking for and take advantage of them. Judge here, talking about positions in SNAP and LAUR. Long 5 of the LAUR, 17.5 puts. Okay, thanks for teaching, great trade. It makes sense. IPO lockups, we covered that on the podcast. Kramer loves the idea, but it's a great way for retail to get involved. And remember, when we bought those 17.5 puts for 30 cents, you buy a 10 lot, it's $300. You can't lose $1 more than $300. So when you get into that trade exactly what your risk is. That's what I want. I don't want to be in a trade where I don't know what my risk is. That's scary. So let me stop here, guys. Do you see the potential in learning how to properly do this? Notice we didn't talk about technicals. Technicals are fine, but it's one feather in your cap out of 10. So what this really is, it's the foundation to trade options forever. And if you've been trading for a while, maybe you're not getting the results that you deserve, you really need to stop and reevaluate, because there is a better way. But change is hard, I get that. Change takes time. But what really takes the lion's share of time is knowing you need to change, thinking about changing, always going back to what you've done in the past and not changing. That's what takes time. But once you change and commit, the change happens fast. So hear me out. I think you'll see there's no BS, no games, just real information. So the way it works is swinging for the fences covers everything you need to find, trade, and then, most important, manage your positions. We start to teach trying to find the inexpensive options, okay? Trying to find those options priced less than 50 cents. Then we want to risk small and go for big returns. After that, we just set it and forget it, okay? If you're not around the market all day, this is great. There's no active management throughout the day. What I find about trading is if you haven't found your way, it's not your fault. It's not your fault if you're willing to learn. You spend time learning something and it ends up being the wrong thing. It's not that trading is that complicated. When I hire traders, I'm not concerned whether they can learn the material. My concern is whether their temperament is good. Are they stubborn? Can they admit fault? Are they coachable? I mean, imagine if you were the next testimonial that says, I need $1,300 more to double my account in a month on an $8,000 account. What would that mean for you? For Stephen earlier, he wanted to be a stay-at-home dad. For me, I trade and I do what I love so I can spend time with my kids. So let's get into exactly how it works. Accountability in trading is so important. So I found a way to make this program accountable so your education never stops. Swinging for the Fences includes one live class every single month. And you get that one live class forever. So after 2 years, you'll have 24 classes. After 3 years, 36 classes. I do this because my clients were telling me that they felt like they were on their own, which is really frustrating, and it made many of them want to just give up. So with Swinging for the Fences, you get a live class once per month forever. The class is 60 minutes. During the class, we do a Q&A, and then we just look for trade ideas. We look for different opportunity in the market together. There's no sales, nothing. It's just training. It's just going over options, learning options. Okay? I know options. I can explain them in a clear way, but I want to make this forever, so there's no rush. Take your time. I'm not going anywhere. The value of this class is forever? I don't know. I would think though it's pretty hefty, learning from a professional market maker. Now let's talk about who this is for. Beginners, if you've never looked at an option, just be patient. It'll take time, sure. But if you're risking money in the market, options are too big to ignore. If you're willing to put in the effort, this is for you. Invest in real education. Learn how to fish so you can do this forever. Same for those that are new to options and just learning. The information across the internet, especially on options, it's confusing and conflicting. You're not going to find anyone more qualified than I am to teach you the proper way. For more experienced traders, are you coachable? I saw a lot of 5s up there, but I didn't see a lot of answers talking about scalping gamma, managing your position using stock, skew, volatility, all really, really important. So for more experienced traders, are you coachable? Are you willing to say what I'm doing, I can do better? Because that group is the most vulnerable of everyone. So here's what's also included. The live class is given at the end of every month. I want you guys to be able to start studying right away, so you get the swinging for the fences. It's a 2-hour workshop. This is start watching immediately, start watching tonight. This teaches you how to find the little stuff. And then in the class, we'll go over the workshop and look for actionable trades. The main benefits that you'll find, it's defined risk. You know exactly what you're risking. You can never lose more. No tail risk. No selling naked options. Nothing silly like that. No trying to make $1 to risk 5. No thanks. It's set it and forget it. Do the research before. Put the trades on. Hey, all we can do is put ourselves in the best position to succeed, and then the market's going to do what the market's going to do. It's very straightforward. It could protect your overall portfolio. If the market drops 10% on Monday, if you're doing the swinging for the fences and you own little puts, you're long puts. You have built-in protection. And again, it's the foundation to trade options forever. This is exactly how I learned. It's exactly how I always teach. Here's Paul. Paul sent me an awesome video. Talked about how the program completely transformed his trading. The main benefits for Paul were twofold. For one, the obvious one, since joining, his relatively small account from 6,000 is now 11,000. What he said next is what I take most pride in. He's having lunch with his wife during the day. He's playing golf with his friends. He doesn't feel like he needs to be tied down to the market. These positions, once you put on, it's over. Again, the market's going to do what the market's going to do. So if we go over the offer so far, you get those 2 hours swinging for the fences masterclass, and then you get a live class at the end of every month forever. You also get the recordings. Exactly what you're going to learn: how to find the right trades, how to scan for those trades. It's a free scanner. I teach everything on FinViz, F-I-N-V-I-Z. You don't have to pay for a scanner. How to put orders in the market, what kind of orders that we put in the market. And then most importantly, managing those trades. There's 3 ways to manage an options position. You can get out, you can roll it into a spread, and what I like to do and where I see the biggest improvement is learning how to scalp gamma. These are the comments I get most often. Jaroslaw writes, "Thank you very much for teaching me how to scalp gamma. It's amazing how you can manage your positions. By the way, I've never heard about it, and I was subscribed to a lot of services." That's the biggest game changer I see, learning position management. So more bonuses. I want to over-deliver for you because I know many are frustrated and some are even angry. So I'm adding a bonus workshop This is another hour workshop. It's 3 ways to manage your options position. Again, cover, roll it into a spread, scalp gamma. Those are the 3 ways you can manage your options position. You don't want to be long calls and buy puts to protect them. That is not protecting your options position. So here's what you get. It allows you to start trading, start learning immediately. Many are still spinning their wheels or frustrated, maybe just not confident. When does it stop? Because if you do nothing, nothing ever changes. It just gets worse. And then what? What if that trading account gets cut in half? Or for many of you, what happens if it gets cut in half again? So join me and the hundreds of others who have joined the program. What I did here is I sent a survey out to clients who have swing and said, what's your favorite aspect of swing? I got 32 people who responded. What you'll see from these 32 responses is 100% of these are positive. Learning how to scalp gamma, access for a lifetime, big money potential, feeling confident, continued monthly classes, clarity, okay? Potential for high gains, consistency, Jonathan's honesty and passion, Jonathan's passion, you know, learning to fish on your own, no BS, real practical common sense, okay? 100%. Now finally, I love working with clients. I receive some unbelievably sweet emails. The ones that always make me uncomfortable is when someone says, wow, you're a genius or you're so smart. I'm not a genius. I guarantee I'm not the smartest person in this room. Okay, but what I offer is an expertise in a very specific thing, and that's options valuation. So I'm smart enough to know that I don't have all the answers, but I'm also smart enough to know that my skill set presents edge in the option space, and that's what I offer you. So now you have a choice. 1, don't change. Do the same thing. Maybe you take a few nuggets you learned and try to improve. Or 2, commit to doing things different. Commit to being a more complete trader so you can really put yourself in a position to do this forever. So for the price I show on the following page, this is going to be good for a limited time. So value this opportunity. You get unlimited classes from a professional trader, 3 hours of real content, no BS, that's yours to watch immediately. And I bet the offer is going to be less than you think. Lastly, I'm so appreciative to be included in this great event. So I really want to make this offer special because I know many of you haven't been on any of my presentations. So for anyone who moves forward today, I'm also going to throw in a 60-minute training on 2 awesome topics. For 1, IPO lockups. That same trade we did in LAUR, we also did in XRF, look up XRF. 30 minutes of IPOs and 30 minutes of bond futures. So anybody who moves forward today, you'll also get this 60-minute training. So if I go over everything, you get the 2-hour swing, the 1-hour 3 ways to manage your options position, live class once a month forever, and 60 minutes training on IPO lockups and bond futures, okay? The price for this is a one-time payment. This is not a membership. One-time payment, once you're in forever. And it's not $497, it's $297, okay? That's my commitment to you. This is my flagship product. I want this to be special. I want you to feel like you're never alone. That's my #1 intention, okay? So for anybody who wants to move forward, it's activedaytrader.com/swing. If I break down the classes, if you want to break it down further, 12 classes, $24. 24 classes will be $12. It's not going to take you long to realize this is an absolute no-brainer. Okay? You get all that. It's a one-time payment. You'll never have to pay a dime for this again. Okay? I'll throw it in the chat. It's going to be activedaytrader.com/swing. And I think we have like 5 minutes that I can answer any questions now. I know there are a bunch of questions that came through earlier. Okay, so questions. So Richie, so I was just going through having a reason for each trade. One of our recent trades is overstock.com. This was Mark again, 400% in overstock, 45.50 bull call spread in November. It just closed at $55. Swing is going to teach you how to find trades, how to search for trades, and then how to manage those trades. What we do in the monthly class is we just get together, we powwow, and we look for opportunity. Gregory, a market maker, that's a profession. I was a market maker on the floor of the Chicago Board Option Exchange. Market makers make the markets in all options. Jay, I'm not sure. That's an excellent, I just don't know. Email support at Active Day Trader. Oh, it does show, good. Gregory, it looks like I have the pricing backwards. So the pricing, it's $297, guys. It's $297, you're all in. Here's a trade right now. MDXG. MDXG is breaking the law. I think they're fraudulent. Here's a trade that we're talking about right now. MDXG, right here, what this is just showing is they're telling a former employee who wrote a letter to the SEC to retract it. That's illegal. William, what I teach is how to manage your trade, how to find these trades. If we have 10 people, you're going to have 10 different returns. Okay, the only returns that matter, guys, are audited financial returns. Okay. And again, it's all about the education. Once a month, you come to those classes, ask whatever questions you want. We'll be searching together. We do that every month. So I've had people in the Swing for the Fences program that have been with me for 16 months, 18 months, and they've had 18 live classes. Bill, do I have an idea of how often these trades will work out or how often they don't? I mean, Bill, not without just making up a number. I mean, again, learning how to manage your positions, guys, is the most powerful thing in options. Earlier, I showed that example about selling stock rather than just covering options. It's a big deal. Frank, do I trade Forex? I do, Frank, but I have a policy that I only teach things that I've done professionally. So I teach options valuation and bond futures. So you guys, whoever moves forward today, you'll get that extra 60-minute bonus. It's got 30 minutes on bond futures, so you can see how we approach the market. Srinivas, does this work for Indian markets? This teaches you how to price options. So I don't trade Indian markets, but if you trade options in the Indian markets, yes, this teaches you how to price and value options. Okay, I think I'm running out of time. If you have any additional questions, guys, that's my direct email. You can always just email me directly. And again, $297, activedaytrader.com/swing. Okay, Jeff, I'll pass it back to you. Thank you again. Thanks very much for inviting me. This is a really great event.
All right, thanks, Sean. Good. Thanks for coming.
Thanks,
Great
buddy.
class. All right, guys. Hope we're still doing well. Hope you're hanging in there. We're getting there towards the 8th inning. And it's been a great event for me today. I do want to say thanks for coming, all that kind of stuff. The phone number, the chat lines are open for Metastock if you want to sign up for the Trader Toolbox or the 3-for-1 special. Give us a call, 800-882-3040, or you can visit us online at metastock.com/saleschat. I do want to thank our sponsors, Stocks and Commodities Magazine. Been sponsoring the sessions for since we started, since the very, very first one. It's a great magazine, and you should kind of check it out. Again, the trial that we're offering for you for Metastock is buy one, get three. Okay, so for $59 a month, you can be using Metastock in December, January, and February, and really a good opportunity for you.